On the next strategy that we're going to talk about. Going off of the last strategy, we're still using the same RSI settings. We have a 7-period RSI with 80-20, 80 being overbought, 20 being oversold. Again, 7-period, just like in the last video. The only thing that's going to change actually with this strategy from the strategy we just talked about, the 1-2-3 reversal, is that we're going to be using our swing high engulfing entry instead of the 1-2-3 engulfing entry. And this specific strategy is called the swing reversal strategy. And I'm sure you can guess why. We're using the swing high and swing low engulfing pattern to enter the market on these. And the reason I separated these two videos is because some pairs are going to work really well with the 1-2-3 reversal strategy that we just looked at on the euro dollar. And some pairs are going to work really well with the swing reversal strategy like we're looking at right here, like we're going to talk about today. Some pairs do work really well with both, but if I was you, I would test both entries using different colored arrows or different colored lines, whatever you use to point out your trades. Test both kinds of entries, and then at the end, if both end up being really profitable, use both. If only one ends up being more profitable than the other or fits in your trading plan better, then make sure to just pick the one that fits in your trading plan best. But let's go ahead and get started today with the swing reversal strategy. So the swing reversal strategy, again, all we'll be looking for is overbought situations like right here on the RSI, or oversold like right here. Once we get overbought or oversold, same thing. We're just looking for this pattern coming directly out of overbought or oversold. We're looking for the swing high or swing low engulfing pattern, the advanced engulfing entry that we've already used before in the transition phase. So looking for this advanced engulfing entry in a period of oversold or overbought when the market's extended and exhausted. So this actually makes a lot of logical sense. The reason we're doing this with both the 1-2-3 and the swing reversal strategies is because in a period of 80 overbought or 20 oversold on the RSI indicator, the market is normally exhausted. And when the market's exhausted and we get a push up like this, let's talk about the logical definition of what this candlestick's telling us. We get a push up making a new high. And then the bears push this market all the way down to the point that we engulf the previous candle. That's a pretty big sign that we could see a drop out of this market. Now, if we combine this with the condition of the market being overbought above the 80 line on our RSI indicator, then that can make for some very accurate trading opportunities. So let's go ahead and look through the chart here on the dollar Canada, and we'll point out a few of these trades. We're not going to spend very long on this. It'll probably be a pretty short tutorial because this is very, very similar to the last strategy we took a look at. All right, let's go ahead and get started. I will zoom in a bit further here to help you guys see. What we're looking for is this RSI indicator to go overbought. Then we'll be looking for our swing high engulfing candle. So continuing to push forward and pay attention to nothing but the right hand side of the screen, guys. This is how you want to test. All right, we're oversold. Let's see if we get a, well, there we go. What do we have right there? We have an oversold RSI, right? We're below the 20 line, and the same thing applies as did with the 1-2-3 reversal. We need at least the candle before this to be oversold, and we are oversold with the candle before the swing low engulfing candle here. And what do we get afterwards? We get this swing low, market pushing down, swing low, meaning we made lower lows. The market tried to push down, and then an engulfing candle on the way back up. Let's see if this pushes this market up or down. And as we look there, we got a nice little push up. Same thing for stops and targets here. So for the stop loss, if we look up here, we have a 35 ATR. So what we would do is have 35 pips below this as our stop. We would have a target at 1-to-1 if you trade in the same exact way I do, which is 2 different targets. First target's always at a 1-to-1, moving the stop loss to break even. Let's actually check and see if this would have been a winning trade. I'll grab my ruler tool. 35 plus 45 is going to be 80 pips. Nope, this ended up being a losing trade, only 58 pips of profit. And I'll go ahead and show you guys what I mean by lines. I like marking these with lines. I used to use arrows, but these lines actually show you the date and time of the trade right down here at the bottom. And that makes it a lot easier whenever you're actually plugging this into a spreadsheet. So using these lines is really helpful. And let's continue to look for our strategy. So looking now for oversold or overbought markets. We'll kind of speed this up a bit, zoom it out until we find oversold. And right there we have oversold. Is this a swing low? No, it is not. This low over here is lower than this low, and we do need that to be a swing low, so that does not count. Oop, went a little too far. Now, is this a swing low engulfing candle? Of course, we have a push down, we have our swing low, and then this market rallied up really hard, really fast, and ended up engulfing and closing above the previous candle. So right here, swing low, engulfing, stop loss 35 pips below this. Let's see what this market does from this level after being overextended, exhausted, and getting our swing low engulfing candle. We get a little double bottom action, still not stopped out by any means, and perfect. We get a nice trading opportunity, a nice winning trade out of that, probably a multiple target winner. We'll mark that with a green line. Now let's continue to look for more entries. Okay, there we go already. What do we have here? This market goes into an overbought condition, right? We get above our 80 line, and that is on this candle. Then we get a market that tries to push higher with this swing high, pushes all the way down and closes below the previous body, making this our swing high engulfing candle or our entry candle. Enter the market here, 35 pips above it with a stop loss, 35 pips for our first target. And let's see what the market does. Great, we get a nice push down, another winning trade. And we'll just go through a few more of these guys. We'll continue to look at the market here, waiting for swing low. Excuse me, waiting for oversold condition. As you can see, we get this nice swing low candle, but this is not an engulfing candle to the previous bar, also not oversold, so this would not count. Now we're getting closer to oversold, still not there. Let's zoom out and go ahead and find some oversold market conditions. All right, there we are, oversold market conditions, waiting for a swing low engulfing, and there we go. So market is still oversold. We're below the 20 period moving average. We're pushing down. The market tries to make new lows, but instead gets pushed up and closes back above the body of the previous candle. Perfect entry for the swing reversal strategy because the market is oversold below the 20 mark of our RSI. Looking to see if this market rallied from this level. And yes, we did. We ended up at least hitting first targets, I'm sure, with that rally. So go ahead and mark that with a green line. And again, guys, as I was saying before, if you end up getting a 1, 2, 3 reversal while you're testing, just go ahead and test both. And instead of using green and red, maybe use orange for losses on the 1, 2, 3 reversal and blue for wins. And that'll make it easier when it comes to separating them. You can do this for all the pairs that you would like to, and some pairs, again, will work great with both. Some pairs will only work good with the 1, 2, 3 reversal or swing reversal. So keep that in mind. Let's go ahead and continue to look for entries here on the dollar Canada. Swing high right here, but what's wrong with this entry, guys? Right here we have a swing high. We're definitely coming out of overbought, but this candle did not close all the way back down below our previous candle, so that means that we're not able to take that as a swing reversal pattern or as a swing reversal strategy trade. Not a valid trade there. Looking for more overbought or oversold conditions. All right, what do we have right there? Looking down here at our RSI, we are over our 80 line. We have a market pushing up, trying to rally. We get a higher high, market trying to rally up above this previous candle, but then close comes below the low of the previous candle. So what is that going to mean? That means that's our entry. We have our stop loss 35 pips above the previous high. And it's not just 35 pips, guys. We're actually looking up here at the ATR indicator for our stop loss, just as we did with the previous strategy. So what happened after that trade? Ended up pushing down and was a winning trade. Mark that with a green arrow. And we'll look at one more trade, guys. Looks like we already found it. See if you can spot it on your screen. Hint, it will be at the right edge. So we have a market pushing down. We have a market coming into oversold. Right here, this market gets to about 19 versus the 20 oversold line. Once we get to that level, which was on this candle, we know we're looking for our swing low engulfing pattern. So right here is that pattern. We enter the market, stop loss 1 ATR below the low of that swing candle, targets at a 1-to-1 initially, and let's see what happens. Of course, we get that nice push up, so that ends up being a winning trade. So guys, that is the swing reversal strategy. As you can see through this very small period of market data, this can provide with some pretty accurate situations, but do not take my word for that. Take this strategy out there and do the same process. Again, just like we talked about in the last video, you'll want to go ahead and test this on multiple pairs. Test this and the 1, 2, 3 reversal on multiple pairs. Optimize for the best pairs for these strategies. And I did say I was going to give you guys my favorite pair for this strategy, and it is the pair that we're currently testing on. My favorite pair for the swing reversal strategy is the Dollar Canada. The Dollar Swiss works really well also for this strategy. Again, I'm not a financial advisor. I'm not here giving you financial advice. This is my opinion on the things that I've learned throughout the market. It is completely up to you, and it is your responsibility to go out there, test these strategies, come up with a risk management plan around this strategy combined with the pullback strategy, create an entire trading plan around both of those guys. If you've been through the transition course, which I expect that you have at this point, then you have everything that you need to incorporate this into your trading plan, go through the same exact process we did in the transition course with these two strategies. And as always, email me if you have any questions directly at steven@thetradingchannel.net or email support. And if they have a question they cannot help you with, they will direct it to me. So have fun with this one, guys. Email me and let me know what your results look like. Give me some feedback on how you're liking the course and program so far. We may be looking at a couple of different strategies, and moving forward, we're also going to be taking a look at some multiple time frame strategies and how we can use all the things combined that we've talked about now. We can include all of that with multiple time frame analysis and with top-down analysis. So I'm really excited to get through those as well. Can't wait for those videos, guys. I'll see you in the next lessons.